Bitcoin in the crypto markets got some relief recently from the spot Bitcoin ETF filing from BlackRock that has been making headlines. However, that doesn't mean that we're out of the woods yet, as altcoins, exchanges, and even broader financial markets still look shaky. The data and sentiment shows that we still could be seeing a large downturn here very soon. BlackRock Bitcoin ETF is the real deal. That's really the question that everyone's asking. And when we're purely focusing on just Bitcoin and not the broader crypto markets or the financial markets at that point, it does look like it's very good for Bitcoin's price. As we take a look at Bitcoin's price in terms of when the first Bitcoin spot ETF was released in Canada, it actually had almost a 2x on its price. Now, we could say that this is just from the bull market and it's just a coincidence. But if we go back to when the first gold ETF was established, going back to the SEC's archives, gold was first established in the New York Stock Exchange in the late November of 2004, right here highlighted in the green. And if we take a look at gold's price when that happened, right around here in this white arrow, we can see that gold's price rose 339% since that time frame and over the last decade and a few more years to add to that. So it really begs the question, will Bitcoin see these same effects that gold did when it hit the markets with its first ETF in the United States? And especially coming from BlackRock, it really does seem like it could. However, when we zoom out and take a look at the macro and the rest of the market, things don't look as promising. As we know, the Fed paused in June with the option to raise rates in July, but they say they want to look at the data and keep their options open. However, I think that they paused because under the surface, there are too many stress fractures in the foundation of the financial sector. And that's really the reason. They just wanted to give it some time to heal. And even during the post meeting of when they said they weren't going to raise rates in June, they said Fed holds off on a rate hike, but says 2 more are coming later this year. Holding the target range steady at this meeting allows the committee to assess additional information and its implications for monetary policy. When we look at the core inflation, yes, CPI year over year has fallen from 9.1% to a mere 4.0%. It's still above that 2% target that the Fed wants. And even if we look at core inflation, it doesn't look as optimistic because back in July of 2022, literally just 10 months ago, it was sitting at 5.9%. Fast forward to 10 months, it's just dropped to 5.3%. So over the past 10 months, core inflation has only dropped 0.6%, which really begs the question, if they're really trying to bring down inflation, why would they pause raising interest rates unless something under the surface is about to break? If we take a look at the FOMC meeting next month in July, we can see that there's a 75% chance that they do raise rates by 25 basis points. Now, obviously, this is going to change as data comes out and a lot of sentiment changes in the markets. But as it stands right now, it looks like that in July, they are going to raise rates once again. And when we're talking about recent recessions and just looking in the past when everything happened, if you take a look at the current sector of what's going on right now, it looks like we are in one of the worst recessions that could possibly hit us. However, a lot of people are still staying optimistic. And if you look at this chart, dating all the way back, the X's mean that there are recessions, and an overall signal was given for this current recession to be a pretty big one. Now, I think we all remember the whole Binance US and SEC thing that happened a week ago where the SEC wanted to freeze all of Binance's assets because they were commingling with their funds and they were taking a lot of those funds out of the United States and they wanted to protect investors. We've seen this before. A year ago, Celsius on June 13th paused withdrawals, and from there it went downhill. Bitcoin fell 30% one week. The Celsius token crashed 70%. The crypto markets fell below $1 trillion in market cap in January of 2021. And then Celsius filed for bankruptcy, and it has been noted to become one of the largest failures in the crypto industry. Thankfully, it doesn't seem like that same fate is going to happen for Binance as the judge signs off on Binance SEC deal to move all U.S. customer funds into the United States and onshore. However, we're still not out of the woods yet with this. And remember, the SEC alleged that CZ and Binance were commingling customer funds, which sounds eerily like the FTX situation and their FTT token, which, just in case you forgot, went to zero. Now, if Binance ends up like FTX for whatever reason, because they might have been doing the same things, there's no doubt that we could see broad carnage in the altcoin market and basically the entire crypto market and possibly Bitcoin's price. If we take a look at Binance price right now, you could see that it's sitting just around the 250 range, which it could fall to these low 220s. However, when we look at the FTT token, you can see that it looks eerily similar to how Binance is doing right now. And when FTX failed and everyone knew that they were commingling funds and they were illiquid, that's when they collapsed. And it seems like this is something very similar in terms of the charts and technical analysis for Binance, where if that does come out and it seems like they are illiquid, could Binance suffer this same fate as the FTT token? Because I mean, as of right now, it looks like that there is that possibility. Now, the final thing that I want to talk about is Vitalik Buterin brought out a blog post on June 9th, basically talking about the 3 massive transitions that Ethereum needs to go through in order for it to be successful in the long term. Now, while I'll leave a description of this in the description down below the video, Milk Road did an excellent job in terms of summarizing this entire blog post. Now, it was basically titled, "Ethereum will fail without these 3 moves." It's called the 3 transitions. As you can see, the first transition is layer 2 scaling. This is where everything comes into play with rollups. The reason why it's so important is because it costs $3.65 to swap tokens on the Ethereum mainnet. A little pricey, but if you're using rollups, it's just going to cost you 10 cents. So scalability is one of the big transitions. The second one is security, the wallet security transition, everyone moving to smart contract wallets. Why? Because people need to know where the safest place to store your assets are. And that's a big problem in the crypto space, is safety. And we need a lot of people, especially new people coming into the space, to feel like their assets are being held in a safe place. And the last transition is the privacy transition, where everyone moving to privacy preserving tools. Now, Vitalik believes that having all transactions available for anyone to see is far too high of a privacy sacrifice for many of the users. And now, if you're new to crypto or you don't understand how Ethereum works, you might be asking yourself, why doesn't Vitalik just make these changes? Well, it's because it's decentralized, and the community needs to come together and make these 3 transitions. While he can basically say that he wants this to happen, he can't implement it himself because he's not the CEO like Zuckerberg at Facebook. He is basically just a prominent figure within the Ethereum community, and while he can propose a lot of this, it doesn't mean that it's going to happen. And without these 3, he says that Ethereum can fail. And if we're taking a look at the price of Ethereum, we can see that it's in this somewhat of a bearish flag pattern where it had this massive drop, obviously, in the summer of 2022, but it's been slowly creeping up and rising. And over the last few weeks, we've seen it continue to fall. And if it breaks out of this channel, it could fall to the prices of the low 1200s, possibly down to even $1,000 per bit or for Ethereum. And unfortunately, when we look at the Ethereum compared to Bitcoin monthly gains, you could see all the way from June to basically December, the gains are negative. And so that begs the question for the rest of the year in 2023, especially with this recession looming and the altcoin market getting destroyed out there, are Ethereum's gains going to be shed off by basically Bitcoin's gains? And when we look at the Ethereum to Bitcoin dominance, as Benjamin Cowell likes to put it, he's basically saying that Ethereum Bitcoin valuation is continuously going to fall, possibly down even to this level. So for the rest of the year, while Ethereum may be a good play long term, we have to ask ourselves in these uncertain times and all the noise around the altcoin market, is Ethereum really a good play to be in? Personally, I don't think so. I think until Bitcoin starts to rally, getting out of the altcoin market is probably the smartest decision, but really it's up to you at the end of the day. So that's everything I have for this video, everything I wanted to warn you guys about. But until the next one, I'll see you guys then.